Hey, it's Dwayne, CFRN. Just a quick video and an email to remind those of you that turned out today for the free trial. The password is the same tomorrow. Okay, your free trial is good for 5 days in the live trading room, and again tomorrow. Volatility, piece of cake, right? Never fails on the free trials. I always get on the second day, because when you get that little automated email that has the link, it doesn't have the password. And people assume that I change the password every day, but I don't. Shh, it's going to be volatility all week. Okay, that's the deal. Now, I also want to show you just real quick while we've got the video running. When I talked to you last night and gave you, a little background on our trade setup, the methodology, how it all works, etc., etc. I told you that some days we get it done in one trade. Our daily goal, boom, done. Other days, we have to actually work for it. Today was one of those days where everything just fell into place. I'll show you the trade here real quick. I'm not going to keep you on this video as long as I did on the one last night. You have my word. I got there right at the opening bell. Now the trading room, Michael opens the trading room about an hour before the market opens, but there's no audio commentary. So if you come early, 9 o'clock, 9:15, you see the charts going, but you don't hear anything. Don't worry. Your audio's not broken. Your headset's not broken. Michael just hasn't shown up, or I haven't shown up to start providing any commentary. So this morning, the bell rang. The market started to do their thing. And on the Russell, we had right here. Now, this was right at the opening bell. Okay, that is a bearish cross. At least that's what we call it. Okay, what that means is this red line, our primary indicator, has crossed over and below the green line. So now conditions are bearish. Prior to the open, if we scoot back, conditions were bullish just briefly, and then we went back to bearish. Okay, and every trade, every one of our trades will always start out with either a bearish cross or a bullish cross. Okay, once we got the cross, what happened? Price needed to pull away from this green line. I told you the fancy term is BBC, bull bear cross. All that means, when price is above it, we're bullish. When price is below it, we're bearish. As you can see, works really well. Now, Michael did not take this trade, and I don't know why, because this was a perfect setup. Bearish cross, price pulls away, price pulls back. Once we touch the green line, then we need a down close, which is fancy talk for a red candle. And then we simply sell the open of the next candle. And the open of that candle was 11:34.10. But apparently he was either talking to me, or talking to one of the partners, or talking to somebody on the trial, and he missed this trade. But that's okay. Some days the markets are kind and forgiving. And what happens? Price pulls away again, pulls back, touches, touches the BBC, gives us a down close or a red candle. But there's something a little different here. If you follow this line straight down, you see this line down here? That's called the cycle line. It looks just like the line up here, but they have two different mathematical programs running them. So this one we call the CFMA1. This one down here, it's called the cycle indicator. Now, the pullback happened perfectly. Step one is always the cross. It's either a bullish cross or a bearish cross. If it's a bearish cross, you want price to pull away and then price to pull back. It's just like pulling back a bow and arrow or pulling back a slingshot. See? Now, when we check for our divergence down here inside of the indicator, it's not divergence against price, it's divergence inside of the indicator itself. Something has happened. Our red line, which we all know is bearish, it's a bearish color, it's turned blue. Does that mean we no longer have a trade? No. What it does mean, though, okay, it's very important, when we have bearish conditions because the cycle indicator is below the green line down here. See, we're big on fancy terms, green line. It's turned blue. So while the conditions are still bearish, we've lost a little bit of the edge. And so we have to make up for that. We want the market to prove to us that it really does fully intend to continue down. All right. So what we do is we draw a trend line from the swing low across the bottoms back up to the BBC. Okay. See if I can draw a trend line. Yeah, there we go. Oh, all right, there we go. Now, we need a down close, but because this line turned blue on us, we need a down close or a red candle below the trend line. In other words, we're making the market, again, just reaffirm, show us, show me a little something else. Tell me you really do want to go down. And so we break this trend line, we close below it. All we do now is sell the open of the next candle. That would be this candle. Okay. Now, over here on the pullback, if the cycle down here were still red, there'd be no need for this trend line. The only reason we have to qualify with the trend line now is because the cycle turned blue. Okay. So what we're doing is we're now selling the open. If I said buying before, I'm sorry, this is a short trade. We're selling the open of the next candle. Unfortunately, the next candle turns out to be a green candle, but that's okay. Just as being stopped out is part of the business, having a drawdown is part of the business. However, we never risk more than 8 ticks per trade. So on this particular trade, if we sell the open of the candle, which is what we did, the open was 1132.70. So let me write that down. 1132.70. Okay. And I'll stick it right there. All right. Here's your drawdown, the red candle. The swing high was 1133.10. So I'll write that down. 1133.10. So we entered the trade at 1132.70. We then had a drawdown to 1133.10. The Russell has 10 ticks per point. So from 1132.70 to 1133.10, that's 4 ticks. We had a 4-tick drawdown. Now remember, we never risk more than 8 ticks. So could we have gotten stopped out on this trade? Absolutely, if it had continued to move against us, but it didn't. Alright, to recap, we entered at 1132.70. We had a drawdown to 1133.10, 4 ticks, And then the trade began to move in our favor, and it dropped, and it dropped, and it dropped, and it dropped, and it dropped. The actual swing low of that particular trade. Oh, come on. You can do this. The swing low was 1124.40. 1124.40. Did we trade it that far? No. No, we did not. Okay. That was the swing low of the trade. From 1132.70 to 1124.40. That was, let's see, let's do the math. 1132.70 minus 1124.40 equals 8.3 points. I'm going to say that again, 8.3 points. Now there's 10 ticks to a point. So what did we have here? We had 83 ticks. Did we take it all? No. Well, why not? So 83 ticks, and the Russell pays $10 per tick. Now, let's save a tree. I'll put it all in one little spot. 83 ticks times $10 per tick. This was an $830 move per contract. Okay? $830 per contract. Did we get it all? No. If you're a 10 contract trader, you can do some quick math and figure out what that was worth. Okay? Now, why didn't we get it all? Well, I'll tell you why. We use aggressive risk management. You saw Michael this morning, and you were probably a little blown away by how aggressive he really is. But that's our methodology. We want to teach you how to stay in the business long enough to learn the business. And aggressive risk management will help you stay around for a while. As price begins to move in our favor, once price moves 4 ticks in our favor, we move our stop to break even. Now, where would break even be? 1132.70, right there. That's where we got in. Now, I'm sorry. 1132.70 is where we're going to move our stop to break even. I don't know if I said that right or not, but I'll clarify it. That happens once price moves 4 ticks in our favor. So from 1132.70 minus 4 ticks, that's going to be 1132.30. Okay. Now this is going to look pretty jammed up. I'll try to open it up a little bit. 1132.70, 4 ticks, 1132.30 is the number I'm looking for. And I gotta turn this into a straight line, or I'll go cross-side. Okay. There we go. Okay, let's open this thing up. It's very crowded. No need to be that crowded. We got lots of screen space here. So we enter on the open here. We have a drawdown to here. Price then begins to move in our favor. Okay. And then once price moves 4 ticks in our favor, what we do is we take our stop. Remember, we always risk only 8 ticks on every trade. We're going to drag that stop to break even. So the worst case now that can happen is we end up paying a little bit of commission on the trade. As price continues to drop, well, what Michael's going to do, what you saw him do this morning, drag that stop. He actually just plops a new order down. Okay, his account size is sufficient that he can just plop a new order, and then when the trade's finished, he can go back and clean everything up. Okay. Now, what happens is, as you begin to, what number are we at here? 1132.30. See, that's the number we needed to get to start moving our stop. So, price is dropping, dropping, dropping. And what are we doing? We're following, following, following. The price is dropping, 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 dropping. And we're following, following, following. And guess what happened right there? Yep. We got stopped out of the trade. But we got stopped out. Let's see, the swing high here is 1132. Okay. 1132. Now we got in at 1132.70. So that gave us 7 ticks on the trade. Now that's if he did everything perfect. Because he's less than perfect, he didn't stay quite on top of it, and so he actually let it slip, and he caught it here. Okay, right from 70, we want to go all the way back to 1131. Let's see, 1131.70, which is right there. Okay, because that gives him 10 ticks on the trade. Now I can tell you this, you can believe me because you were there to see it happen. Okay, so now look at the time. Okay, the time that we got stopped out on this trade was 6:39 Pacific time. I'm on the West Coast, or Phoenix. And part of the year we're on West Coast time. So in the live trading room, you heard Michael say, there we go. You saw it on the screen. We got our daily goal. I rang the bell, as I do each and every day when we hit our daily goal. And were we not trading in front of a room full of people, our methodology, what we teach you to do is to just be done for the day. Okay, 10 ticks on the Russell equals $100 per contract per day. Like I told you, like we talked about in the live trading room today, we want you to start in the simulator. We want you to perfect this setup. Whatever market you're going to ultimately trade is fine. Now, Michael, you saw him today bouncing from the Russell to the NASDAQ to gold to crude to the S&P, whatever markets he was trading. We don't expect you to do that. Pick 1 or 2 markets. Maybe they're markets you have a history with. Maybe they're markets you've traded and you have some experience. Or just pick 2, you know. Trade a few different ones in the simulator and then pick 2. 3 at the most. But I'd prefer if you just stick with 2. Okay? You're not going to jump around 6 markets the way he does. He does that because he wants to show everyone who has their favorite market, he wants to give them an opportunity to see a successful trade in their market if possible, if the opportunity presents itself. Okay? And so the Russell traders got to see it happen in the Russell today. Now, here's the thing. Because it's the same trade setup, the same indicators, the same time frame, the same thought process on every trade, it really doesn't matter if this had been a Russell trade or a crude trade or a soybean trade. It just really doesn't matter. Why? Because it's the same on every trade. That's what's truly unique about what we do. Again, you start in the simulator until you're consistently profitable. Please stay there. When you're ready, let us know. You'll go live with one contract. Alright? We want you to earn $2,000 of profit before you add another contract. Let's say you opened your account with $5,000. Okay, that's what you funded your account with. And you spent however long you spent in the simulator until you were ready to start, trading live. Maybe it was 2 weeks because you have experience. Maybe you have no experience. It was 3 weeks. It was 4 weeks. Whatever it might have been. Okay. But if you go live with $5,000 in your account, you don't add a second contract until you hit $7,000. If you started out with 4, you need to get it to 6. If you started with 10, you need to get it to 12. See? Because after that first contract, we want every contract that you trade, we want that to be funded by profit you earned in the market. Now, there's a reason for that. If the extra contracts that you trade are funded by, borrowing more money from your 401k or your Aunt Ethel or where the kid's college fund, man, you're going to have added pressure on you that you just don't need. Plus, when you're trading with profit that you earned in the market, you act differently, you think differently, you talk differently, you walk differently. Why? Because you're starting to realize that you really are a trader. You're not just some guy or some lady with money in an account somewhere. See, that's a popular misconception. People think, well, because I have money in an account somewhere and a direct access platform, I'm a trader. Well, unfortunately, that's not true. But if when you add that second contract, you're able to do it because you've earned $2,000 profit in the market, you're a trader. You are. You earn the right to be called a trader. And you're going to behave like a trader. See, a professional trader is not defined by the size of his account or how many contracts he trades. A professional trader is defined by how he behaves, by how he thinks, by how he acts, and by how he trades. So, I hope you had a great time this morning. You're welcome to come back for the next 4 days of the week. If you missed Monday, it's okay. We'll still give you 5 days in the live trading room. So you can come in tomorrow, and then we'll tack on an extra day for you next week. Next Monday it will be. Okay? If you have any questions about anything you saw today, maybe you're a little confused, maybe things are just moving so quickly, you're not sure you really got it. It's okay, relax. You still got 4 days left in the trading room, and before your free trial is up, if you want some private one-on-one time, if you want to get on the phone with us, or maybe after the markets close, or at least after the afternoon radio show, if you want us to do like a private go-to meeting with you and bring up some charts and just really talk you through a couple of the setups, we'll do that. The reason we're willing to do that is because at the end of the 5 days, when it comes time for you to make your decision whether or not you want to become a CFRN partner, we don't want you to have any reservations whatsoever. We want you to be excited. We want you to have used the platform, used the indicators, and actually made yourself some money in the simulator. Okay? We want you to experience profitability this week in the simulator using our platform, our indicators, and our methodology. If you'll follow the rules, and you know, I'm such an anti-disestablishmentarianism kind of a guy, right? Child of the 60s sort of guy. But rules-based trading. Some people, they go, you know, I don't want a bunch of rules. I just want to go with the flow. You know, for the people who can do that and do that successfully, man, I am so happy for you. I thought I was that guy. I thought I could sit tall in the saddle and shoot from the hip, and turns out I could, but the only thing I could shoot was my foot. Again and again and again. So once I learned some rules and then learned how to stick with my rules, yeah, right? That's when it gets good. So you've got our phone number, 949-42 Emini. Let me pop it up here for you just to make life easy, because life's good. You know what? I don't like the word easy. I like simple. 949-42 Emini. In fact, that's our slogan. Trading is not easy, but it can be simple. Okay. Support at cfrn.net. Now, tomorrow morning in the live trading room, don't be shy, okay? If you have questions, there's 3 of us there. Myself, Michael, and Bert. Bert's our broker. If you type something into the chat box, no one can see what you type except me, Michael, and Bert. So don't be embarrassed if maybe you don't understand something that it seems like, you know, everybody already knows. Don't do that to yourself, okay? Just be open. Okay? Nobody's going to put you in the hot seat. Nobody's going to make you feel sorry that you asked the question. We're just going to do our very best to help you understand whatever it is that you didn't quite understand and get you on the right track, okay? So again, 949-42 Emini, or email us support at cfrn.net. And I managed to keep my word. This video is shorter than last night's video. Yay me. And I'll see you tomorrow in the live trading room, okay? Great. Take care.